Hello YouTube, welcome back to my channel. So for those who are not familiar who I am, I go by One Cheap Compadre and you're watching Cheap Compadre TV. Where on our channel we talk about investing, saving, politics, and even sometimes if we get a chance, story time. So before we get started, let me just remind you, I am not a financial advisor, but I do invest, I do save, I have some inkling of historical facts, and I have a whole lot of stories to share. So today, I decided to talk about certain stocks that I'm starting to notice a lot of people from YouTube, from online sources that are giving information about certain stocks like VOO, SPY, and SNOWFLAKE. Now, with these stocks, they do have a variety of different companies that are actually good, from Berkshire, who is owned by Warren Buffett, to Microsoft, that is owned by Bill Gates, to Amazon, that is owned by Bezos, to Facebook, Zuckerberg. So they have a plethora of different variety of companies, mostly tech stocks, which is good to invest in, especially when you don't have to go and search online in other networks in order to find a particular stock, where here in these stocks, they're all under one umbrella, where if one goes up, you're good. If one goes down, you're still good, because they're all moving at different times of the market. So it doesn't really cause you to lose that much money, which is a good thing. But I think what's bad about these particular stocks is that they're going at a price where not the majority of the average person could afford. And I'm starting to notice a certain trend where people are trying to push out companies, stocks that at a certain price, where for the average person, this could be very expensive. For someone who has money, where $300 to $400 may be to them $4, $3, but for the average person, this could be, half of someone's salary. So I'm going to be talking about that today, and how you can actually make some good money from investing by using these particular strategies. Now, first of all, let's talk about SNOWFLAKE, where you have people who are investing in SNOWFLAKE before the IPO even is open to the public. So what that means is they invest into it and then drive up the price and then sell it at a high price and then give it to the public, where the public jumps on board and buy it at the high price, where the ones who had this opportunity to invest before it went out is pretty much taking advantage of that particular company and IPO, which I think is very unfair to that average investor, especially if you're not one of those people who are very patient when IPOs first come out. Now, let me give you a scenario. When Facebook came out and it was going for $40, I went ahead and bought it when it first came out, the IPO, which it did good. I sold it when it went up to about 200 and something, but it went down to 180 and I sold it. But let me give you a different scenario. I bought Snapchat, and I bought that at $30 when it first came out. But with that, it was totally different from Facebook. What this did was dropped, and it kept dropping. And I was losing a lot of money. And I realized to myself, you know what? From now on, when a company first come out their IPO onto the market, what I'm going to do is wait until I buy. Because those investors who invest in that company before it comes out have the advantage, because they're getting it at a cheaper rate than the average person. Because when it goes out into the community, into society, people are buying it when it's at a higher price. So what I do from now on is instead of trying to buy something when it first come out, wait until you see either it goes up or goes down. Because when it goes down, that's when you can come in and buy it at a cheaper rate as well. Not just those investors who get the advantage of investing first before everyone else, which I believe is unfair. You know, that's just as bad as someone getting information on if a company is going to go under or not, right? I think that is called inside trading, which is illegal. And I think that those individuals who get an opportunity to invest in a company before it goes out in IPO is illegal as well, because no way should you be able to invest before everyone else and drive up the price and then sell yours off, and the price is high and new people come in and buy it at a high price and it goes down on them. That is totally unfair, which and why you should avoid these stocks and find stocks that are similar for a much cheaper price. That's the name of the game, is to find stocks that are much cheaper where you can actually afford it and you can buy more of those shares. That's what you should be doing. Because for the average investor, if that's half of your income and you put that in, you're not going to make as much as you would if you can buy something that you can actually afford and buy more of. That is the name of the game, is to buy as many shares of a particular company as possible. When a stock is too expensive, that stops you from buying as much as you can, because you are limited to the amount of shares you can buy. Does that make sense? All right, so like VOO, SPY, yes, these are good companies. Yes, they have a good company in these particular stocks. Yes, that is a good opportunity. But if you can afford $300, $400, if you can't afford to buy something that high price or even more than that, then it doesn't really make sense to be sitting on one share of a company, because you're not going to make as much if you had 100 shares of that particular company. So my thing for you is to look for particular stocks that are similar to these stocks like VOO and SPY, where you can probably find a stock that is much cheaper and had the same companies within that particular stock. Wouldn't that make more sense? And then you'll be able to buy more shares of it. So instead of listening to people who tell you to look into a certain stock or this stock, try to see if you can find a stock that is somewhat similar to that particular stock, which is much cheaper, which allows you to buy more shares, which allows you to make more money. You see how that works? Because if you're buying stocks that are 300, 400, 500, 600, 700, and that's too expensive for you to buy, or it stops you from buying as much shares, then it's really not worth buying. It doesn't make sense to buy Amazon if it's going for $3,000 and the average person's salary is about $2,000 a month. It doesn't make sense for you to try to save up and buy one share of a company where you're not going to make as much. You know, it's not going to double and triple overnight. So instead of buying a $3,000 share in Amazon, you should try to take the $3,000 and find something that is something similar to VO or SBY that is much cheaper, and you can buy 3,000 worth of share in a company where you have 20, 30 companies within that stock where you can make even more money. Wouldn't that make more sense than buying one share of a company? Okay, so what have you learned today? You should have learned that buying stocks, one, you should buy stocks that are reasonable. So one, you should buy stocks that are much cheaper, similar, and you're able to buy more of it. That is the name of the game. Not going and buying stocks that are beyond your affordability. Because all it's doing is just bringing up the price for those companies so they can make more money. Where you should be thinking to yourself ways of making you money. So what do you think? Do you agree with my strategies, or do you think there's a better way? Put your comment down at the bottom. Make sure to hit that bell at the top, and make sure to become a subscriber if you haven't already. For those who are already subscribed, thank you and continue watching. Until then, have a great day.